Good morning, and welcome to another episode of Dividend Stock Talk, where we talk about dividend stocks for weekly and monthly cash flow. Brought to you by the 10-Minute Trader with your host, Mr. James Gartino. Now, here's your host. Hey everyone, this is James. I know it's always weird when I introduce myself like that. Today is Wednesday, 9:28 a.m. on January 13th, 2013. Yesterday was a very busy day. We had to do 3 recordings yesterday because so much activity was going on. And let's just open up our account and see what we're looking at this morning. Come on, open up. Computer acts so differently when you're... No, I don't want to do that. Let's go back to where we were. There it is. Wow, this is always fun. Okay, so here's the account standing as of this morning, 9:29 a.m. The market's going to open up in 1 minute. And basically, as you can see, there's really nothing we can do this morning because we only have $1,300 in cash to play with. We got 4 orders that we're waiting for, and we have quite a bit of positions available that we're still sitting on. So let's take a quick look at what the positions look like, and then we'll go from there. First one we're looking at is AFG. Let's put it up in stock symbol first. AFG, there we go. Is that American Financial? Okay, so American Financial started out the year last year at 108. Took about a month for it to find the high of the year at 112. Just like everything else, last year dropped the middle of March, or the beginning of March, to find the low of the year. Yep, there's the market. She's open. The low of the year at 42.70. From there, she jumped up to a trading range of 62 before finding its high for the last 90 days at, what are we looking at, 92.91. Okay, now she's in a trading range right now somewhere between 83 and 92. Now we're into this one. Let's open up this trade and see what it looks like. Okay, we jumped into this one on the 5th, and we bought this call spread between the 83 and 85. So as long as the stock stays above 85, we're going to make our profit on that one. And it closed yesterday at $90.50. So we're still good. We got a ways to go on that one. It does expire this Friday, so that one looks good. AGNC is the next one we're going to look at. AGNC, bring that up in the 1-year chart. Take a look at that. Started out last year right around 17.97, close to 18. Took about a month and a half to find its high of 19.36 before dropping and bouncing off the bottom at 6.22. So from 19 to 6.22, that's a long way. Okay, so from 6.22 back in March, she jumped up into a trading range between 12 and 14. And then right around November, jumps up to a new trading range right around the 15, which is where she's at today. Now we got into AGNC. Let's open up the trade, take a look at that. On the 12th, which was yesterday, we bought 5,000 shares at 15.46, and that is trade number 3 on yesterday. So looking for it to hit 15.62 today, which, it's possible, 15.62. But we'll see how the day progresses. If we do get cashed out on it, we will get a notification and we'll go from there. All right, third company we're looking at, APA, which I believe is Alpine? No, Apache. Sorry. Okay, so Apache we got last year. Stock started out at 32.01. Within a couple of weeks, it made a high at 33.65. Quickly dropped like everything else did back in March to a low at $4.33. That's got to hurt, from $34 to $4. Wow. Okay, so anyway, she jumps into a trading range between 8 and 15. The last couple of weeks, she jumped up, and she's at 18.53. Now our position on Apache, let's open it up and see where we got. On the 12th, we bought Apache spread, the 16.5 and the 17. As you can see, she's well into the money on that one, so we're going to leave that one alone. Colgate Palmolive is the next one we're going to look at. Now again, Colgate is one of the dividend kings. It's been around for a long time. Colgate started out last year at right around $70. Made its high right around 77.29. Now that was the high for last year. This year she's jumping up to a whole new set of numbers, and we're going to get to that in a second. Now in March she dropped down to 58.22. It didn't take her long to get up back to the trading range where she was. That was back in April, and it was a slow climb from April to another trading range of 77, back to where she started the year out. And then she gets to the new high of the year, which is 86. Okay, so she's up to 86. She drops down, and she's starting up the day today at 82. So where are we with Apache? Take a look at its option. All right. It says 16.5, 17. Sorry, we're on Colgate. Looking at the wrong one. Okay, looking at the orders for Colgate. Now we have 2 orders on Colgate. We bought 300 shares at 82.89, and we're looking for it to hit 83.24 before we're out of that one. Now we also have 50 contracts, 81.5 and the 82.5, and that's well into the money, so we're going to leave that one alone. Wait a minute. 81.5, 82.5. Okay, so she's at 82.26, so she has to stay above 82.50 for us to profit on that one. All right, we really don't want to be stuck with 5,000 shares of Colgate Palmolive trying to figure out where the money's going to come from on that one. Anyway, let's just hope she stays above the 82.50. We have 3 days for her to do that, so I'm not really too worried about that. We got the dividend coming up, and she always moves up right before that. All right, so EPD. That one's next on our list. EPD. EPD started out the year at 28.85, and it was right around that same time where she hit the 29.18, which is the high of the year. Now, she, just like everyone else, drops down to 10.23 for the low of the year back in March. From there, she quickly gets to a trading range of 16 to 20, and trades that way for the whole year, right up to the very end of the year, where she jumps up to makes a new high for the season at, what is it, 22.75, the new high, which was yesterday. So where are we with EPD? Now EPD, we got 1,000 shares at 22.55, and we're still holding on to them. We're looking at 22.99 before we jump out of that one. Hopefully she'll hit today. You never know. See what the market maker wants to do. Okay, so from EPD we got General Dynamics, which is next. General Dynamics started out the year at 181, quickly found its high right on the middle of February at 190. Then from 190 she dropped almost 50% in value to the middle of March. She ended up at right around $100. And she jumps up to a new trading range of 137 to 153, somewhere in there, which is where she's at today. She basically went sideways for the whole year. And then where are we with General Dynamics? All right, we got 500 shares of General Dynamics at 154.73, and we're looking for 155.84. Okay. She could do it. She got the dividend coming up in a couple of weeks, so she should jump up with not too much of an issue on that one. Last on our list is Lowe's. Lowe's is another dividend king. She started out the year last year right at 120, went sideways for a couple months, dropped down to the bottom at 61 before pumping up with a 200% increase to 181.90. That's the high of the year last year. Right now she's in a nice little range, sitting pretty at 169. And where are we with Lowe's? Okay, Lowe's, we got a spread of 160 to 162.5. That one is so far out in the money that it's just laughable. Just going to leave it alone. So as you can see, we basically had nothing to do today. The overall profit and loss to date is 11.6%, which is kind of crazy. Normally doesn't go like this, but it is what it is. You've seen all the trades from number one all the way to where we are today. With that being said, there's really nothing else I can do other than sit and watch to see what happens. When I get any notifications today, maybe we'll jump on, maybe we won't. But until then, this is James from the 10-Minute Trader, Dividend Stock Talk. We will catch you when there's more news to report. Have a great day.